I've lost a ton of money for years and years and years. Phantom. I bought it really, really low. It ended up giving like $1,000 max. I am a 4-time college dropout. I have nothing on paper that says I should be living the life that I'm living. The problem is most of the chains on the market have a few fatal flaws. A lot of crypto is a solution in search of a problem instead of the other way around. The Australian Stock Exchange that spent 7 years trying to do this to no avail. We're not going after the same market that every other chain is. We're going after everybody else. Imagine if stock markets were powered by blockchain. We have solved that.
Welcome to the New World Podcast, where we delve into the ever-changing and accelerating pace of global change and its impact on our lives. I'm your host, John Paul Flores, broadcasting live from the New World Studio. Today, we're diving into the world of AI and automation. As an enthusiast and expert in lead generation, I will guide you through understanding and leveraging these technologies for your business and for your personal use. And don't forget, AI and automation might be unstoppable forces, but that doesn't mean you are powerless. Tune in to learn how to make them work for you and not the other way around. But first, let's meet our guest. Welcome to the New World Podcast, where we navigate the changing world around us. I'm your host, John Paul Flores, specializing in lead generation and AI automation, here to help you understand how our world is changing and what it means for you. In this episode, we have Austin Rampt, Director of Communications and Engagement at Devi. With over 8 years in crypto industry, Austin shares his experience and expertise in decentralized finance, community building, and simplifying blockchain education. We dive deep into how Devi is revolutionizing the blockchain space with its fast, scalable, and secure platform, and its role in the driving of the tokenization and institutional investment. Whether you're new to blockchain or you're the most expert of all, this episode would offer value for you. Insights for the future of digital assets, financial sovereignty, and the power of community. Austin, it's a pleasure to have you in the show.
Yeah, John, thanks for having me, buddy. Thank you for having me. Appreciate it. That was a really, really good entry, by the way.
Yeah, I was inspired because I watched your intro and I said, I got to do better.
Hey, man, all good. You're doing a great job.
Before we begin on the in-depth questions, because I do have some, do you mind giving us a quick intro on who Austin is, what's your expertise, experiences, and what keeps you busy these days?
Yeah, absolutely. How's my sound coming through, by the way? Is it all right?
Yeah, it's absolutely fine.
Okay, cool. Yeah, so who am I, man? How far back do you want to go? If we're just talking blockchain, I got in the industry in mid 2017. Got really into Ethereum mining for a while. Taught myself how to create mining rigs, right? Yeah. And lost a ton of money for years and years and years. And then around 2019, I found this project that like not many people had heard of, and it was worth. It had a lower market cap than Devi does right now, in fact. Yeah. It was called Phantom. And I bought it really, really low. It ended up doing like 1,000x. And so as I was kind of working with that community, somebody was like, hey, why don't you do YouTube shorts where I would do a lot of the interviews with the builders on the network. And then that transitioned into something called Block Bytes, which was just an overall general crypto media company. And that transitioned into what I'm doing here at Devi.
It's amazing. When you ask the questions, how far do you want to go back? I want to ask questions from where you were born.
Ask away, man. I'll tell you. I'll tell you whatever you want to know, my friend.
Why did you get into crypto? Because maybe it's hype. Maybe you were just genuinely interested. Why did you get into blockchain, crypto? All of that stuff.
Sure, I'll tell you. So I am a 4-time college dropout. I have nothing on paper that says I should be living the life that I'm living. And I had a buddy of mine who, you got to remember, 2017, we were like mid to late bull market then, right? So the retail dummies like me were jumping in, we were piling in on whatever the hot new coin is. And so it was, I had a background in So in cryptocurrency, or excuse me, not cryptocurrency, in forex trading, which are, currency trading, I had a company a while back where we would code up these things called expert advisors, they're just essentially trading algorithms that you put in a MetaTrader platform and it executes for you. So this was back in 2007 to 2008. So I had a little bit of trading experience. A little bit of formal training. So when this came about, like, I recognized it, but I didn't understand what it meant. I thought it was just, it's just another chart that we're trading. It didn't quite, I had a lot to learn, and I still have a lot to learn. Like, that's kind of the name of the game, is just always be learning. So I've gone through a lot of different metamorphosis of myself, probably, I would say, in this industry. But it's never a dull moment. I'll tell you that. It's never been dull.
What's interesting is, as you said, you still have a lot of learning. And I think that's where most of the people in the crypto community are in right now. Most of them, they think that a project is just simply a project where there's a coin that you can trade, buy and sell. But, if you look deeper, it's much more insightful than that. It's the best thing ever.
Yeah, for sure. Well, sometimes they're garbage. A lot of the time they're garbage, actually. And one thing I see a lot in crypto is there's a lot of solutions in search of a problem. Yeah. Instead of, right, if you've got a big problem in the world that's in search of a solution and you come up with that solution, it's like, boom, right? You've got product market fit instantly. But what I find a lot of the time in crypto, and I can give you some examples if you want, but well, I probably don't want to do that because then I'd have to call them by name. But there are a lot of like crypto projects that come out and they say, okay, well, we can do this. Right. And we can do this really well, but it's not better than the solution that's already existing in Web 2. And so as a result of that, why would people use your solution if it doesn't make their life any better than what they're currently doing in Web 2? Right. And that's really important. Like, I was on a Twitter Spaces not too long ago where we were being asked about crypto adoption, and somebody, well-meaning, she was super sweet, said, well, I think crypto adoption's happening like in a big way because now on every new iPhone, people have the ability to store USDC and pay with it. Right? USDC is a stable coin. Now, I also own some e-commerce companies, and we have pay with crypto on there, right? And I'll tell you, on the generous side of things, maybe 1 out of every 300 people will pay with crypto. And the reason is it doesn't make their life any better, right? So there's a lot of reasons for stable coins to exist. But like when it comes to actual payments and transacting, it doesn't make people's lives any better. We have Visa, we have MasterCard, we have bank debit, we have all sorts of ways to pay. That's not necessarily a solution that we need unless you're dealing in the unbanked, right? And if you're dealing in the unbanked, like maybe we're talking about African countries or something of that nature, now you've got a different type of solution on your hands. But yeah, a lot of crypto is a solution in search of a problem instead of the other way around, which it should be.
They're trying to make it like, when you pay with your card, it's like having to transfer via wire. It takes days. No, it's not. When you pay by your debit or your Visa, it's not even 5 seconds and the payment's there. So why make something new?
Right. Exactly. Exactly.
I think there's a term for this in the business world where there's startup founders where they want to create a product that helps with this particular problem. And even if they don't even know who they're going to help with. So they spend this enormous amount of time, enormous amount of money, burning the money of their investors, trying to find who their ideal customer is instead of just finding the ideal customer before they even do the startup.
Right. Yeah, I hear you there. And actually, that's been the nice thing about working at Devi because it's never been a solution in search of a problem. It is literally, and we can get into this, but Devi, I mean, even though we are blockchain, we are crypto, it's something completely different because the total addressable market or the market that we're trying to address is not the crypto market necessarily. It's not the Web3 crowd. And we can get into that if you want to, but there are a lot of really big issues that blockchain can solve, right? From like data integrity, from artificial intelligence. There's actually a lot you can do with AI when it comes to blockchain. I'm not sure if you're familiar with I know you mentioned AI a lot, like the black box problem. How did we get from point A to point B? Blockchain helps solve that tremendously. Payments infrastructure, obviously, it's an obvious one, but there are very unique ways in which that can work. We do a lot of work in the impact asset space, which is carbon credits, right? Which are greenhouse gases, essentially, which has a huge lack of transparency in that industry. And it's preventing a ton of liquidity from entering. And blockchain is a great solution for that. But there's been one massive problem up until this point that has prevented almost every enterprise that wants to use blockchain from using it. And the problem is, most of the chains on the market have a few fatal flaws. One, they're beholden to the image of the original developer, meaning they're going to function only in the way that the original developer decided that it would.
Yeah.
Secondly, in a open source, permissionless, anyone can validate transactions way, that doesn't play nice with regulations, unfortunately, right? And so these are a few areas where Devi has a really unique advantage that we can work in where other chains just simply can't.
Yeah. No, in your intro video, especially in the Devi YouTube channel, you also mentioned that a lot of governments tried to do something like this, but they failed. And
go a little deeper. Go a little deeper into your question. What are you talking about?
Yeah, in your intro video, because I think it was the Australian government that you mentioned where they tried to.
Okay, now I understand what you're talking about.
Yeah.
So what that was referring to is actually we're gonna have to go a little bit deeper. So one of the core businesses of Devi is something called Dev Exchange. We have technology that I'm going to give you the real simplified version, but here it is. It gives you the self-custody that people have come to expect from a decentralized exchange with the convenience of a centralized exchange. And because so the infrastructure of Devi is we're a network of what we call shards. And so what that is, we're a blockchain made up of little blockchains that have the ability to talk to one another, right? And it's called a horizontal scaling solution. Where we are uniquely suited in this regard is each shard can be customized down to the screws, meaning you can choose the level of security, you can choose the throughput, you can choose the algorithm, you can choose the number of nodes, you can choose almost anything you want. And what that means is we can build each shard with complete cross-jurisdictional compliance. And here's what I mean by that. If you take Binance, for example, which is a major cryptocurrency exchange, they have Binance.com, which is their one main platform. And then where they've run into issues, and most crypto exchanges have run into issues like this, is, they're KYCing customers from all over the world. And if you've got customers in the UK and you've got customers in the US and you've got some in Canada and then you've got some in Europe, all of those live under different regulatory regimes.
Yeah. And
so what Binance has had to do as a result is they've had to sprout off into Binance US, and they set up Binance Jersey to handle, over in near the UK, and different forms of Binance, because what they're doing is they're trying to create a specific site that adheres to the regulatory regime that they want to service, right? Well, the issue with that is what they end up doing is they fractionalize their liquidity, meaning Binance US, if you want to go trade majors on Binance US, like Bitcoin or Ethereum, you'll probably get some decent liquidity. But if you want to trade, let's say Phantom, for example, which is one I referenced earlier, you're going to have crap liquidity, where the liquidity on Binance.com is very thick because that's the main trading hub. Okay, so they've got, in their effort to be compliant with different regulations, what they've actually done is they've had to essentially they had to split it all up, right? Less liquidity. Your customers are now segmented over here. Okay. What we can do is so there's a couple things. One, we can create a shard for each regulatory regime, meaning if you're in, where are you located? Are you in the States?
I'm from the Philippines.
You're from the Philippines. Great. Okay. Wonderful. So if we can go to the Philippine government and we can say, hey, we want to allow our exchange to exist in your jurisdiction, but we're coming to you first. Please tell us what your regulations are. We will create a shard specifically for those regulations. And then when you KYC, you will be placed into the Philippine shard. Now, what keeps us from having to segment the liquidity and segment the population is something that we call our T1 connector. And this is really our secret sauce. So whereas on other networks, if you've got multiple different blockchains, the problem is they don't talk to each other very well. You have to use something called a bridge to go from one to the other. We have something called a T1 connector, which is it's not a master record like Ethereum is a master record to Arbitrum, but it's essentially what it does is it allows different blockchains to communicate with one another while giving a unified experience. Meaning you can be in the Philippine shard, and then I can be in the United States shard, and then we can have somebody in the UK shard, but we're all operating on the same front end while adhering to the regulations that are specific to our jurisdiction. That is something that nobody else can do. Period. End of story. Nobody else can do that. Now, what that unlocks, and this is really what's interesting here. If you're thinking in a Web3 term, like we want to unlock new crypto stuff, fine. That's a smaller total addressable market of about $3 trillion. The line you were referring to in your intro to Devi, however, is that there have been multiple very large organizations who have tried to upgrade their systems with blockchain, but have not been able to do so. So the one that you were referring to is the Australian Stock Exchange that spent 7 years trying to do this to no avail. There's also an organization, which is a large settlement organization called the DTCC, which settled $460 trillion worth of securities last year. They also could not upgrade their system to blockchain. They want to use blockchain because it allows for self-custody. It allows for data immutability, right? Everything's provable. It's on chain. These are really good things in financial markets. We have solved that problem. Now, if we're talking the $3 trillion crypto market and we want to get a piece of that, that's cool. But if we're talking about the $500 trillion settlement market that exists outside of that, now we're talking about something completely different. Does that make sense?
Correct me if I'm wrong. So basically, if I try to put it in terms where it's not crypto based, let's say I have the Tagalog language and there's the English language. Problem is, if a Filipino goes to US, he's not going to be able to have large liquidity in terms of people to speak with. So what Levy allows is, instead of the Filipino having to go to US and not being able to talk to anyone, it translates it automatically. So it allows you to be able to talk with everyone in US, then US to you. So basically, it allows you to be connected to anyone without having the restrictions of the language barrier, because it's all connected because you optimize it in such a way.
Very cool analogy, and I would say that's probably pretty close. Did you just come up with that on the spot? Because that was really decent, man.
Yeah, I was writing it.
It was really good. But here's one thing I got to point out.
Yeah,
all of your big financial players, and there's a bunch of names people know, like BlackRock, Citadel, New York Stock Exchange, NASDAQ, a whole bunch of others, right? These are names that people know. These organizations want to get into the blockchain space. Most of them have departments on how can we make this work for us. But due to regulations, there has not been any public chain, or they haven't been able to create a private chain, with the exception of Onyx, which was created by JP Morgan, that adheres to regulations in the way that financial institutions must adhere. Period. End of story, right? We have solved that. And not only have we solved that, we've had that validated by some of the largest financial institutions which are partnering with us. Which will be announced fairly soon. It's really, really rad. So when you were talking about governments trying to upgrade their systems, really what we were referring to, what I was referring to, are financial markets, financial institutions that want to use blockchain.
What happens when those financial institutions actually are able to use blockchain? What benefits would that give them?
Well, here's the thing. So first and foremost, what I really want to point out is that when systems get upgraded with blockchain, it should be so seamless that the people using those systems don't even know they're using blockchain. They're just getting a better experience. That's really important, right? Because if I pay you with crypto, I'm still paying you, unquote, with crypto, right? It's still segmented off that we're using cryptocurrency. It's not the sort of thing where, I use internet all the time. I don't walk around going, hey, I used internet today. You know what I mean? Because it's just like, it underpins everything, right? Sorry, I blanked on you. What was your question, John? What was your question again, buddy?
So why switch to blockchain? Why upgrade your systems?
Excellent. Let's talk about that. So we had talked about settlement, right? And settlement's a really, really interesting thing. And it's a thing that happens that 95% of people don't even really kind of understand, is a massive, massive industry. And settlement is essentially where, if you were to go to Fidelity or TD Ameritrade and you wanted to purchase an equity, like let's say you wanted to buy Coca-Cola stock, on your front end screen, what you see is I have spent X amount of dollars and I've received this stock in return. But the true settlement, the actual ownership of that stock transferring over to you, happens in something called like T2, which is the time plus 2 days. Right? And essentially, a great analogy I heard yesterday of kind of how this works is if you walked into a grocery store and you wanted to buy a gallon of milk, and you walked up to the cash register to buy your gallon of milk, and you handed them your probably $7 now. I don't know how much it costs, probably a lot. And they were like, okay, great. In 2 days' time, you can have your milk. And you're like, hey, that's ridiculous. Why would it take 2 days' time? Well, we have to verify you are who you say you are. And then we have to verify that the number of dollars that you spent actually match the value of the milk. And we have to go through this compliance checklist under the hood. And then once we've done all of that, you can have your milk, right? And that's ridiculous. Nobody would play that game. But that's the game that large financial markets often play. So, and it's a big pain in the ass. I mean, I got to be quite honest. And it's not a problem that like 95% of the world know exists, because they've just got a front end on whatever stock exchange or brokerage they're using that helps them to feel like they have a seamless experience. But remember, I referenced the DTCC with you. So $462 trillion in securities they settled in 1 year. It's quite a volume. That's a lot of money. So what Dev Exchange can do is we can take T2 and we can turn it into T0, meaning instant settlement, verifiably, on-chain, full regulatory adherence, and we can do so almost like that. But it takes a really certain type of infrastructure to be able to pull that off.
Yeah. So basically, most of the time when we're buying these stocks from the exchanges, we think we instantly own them, but the exchanges are actually fronting the stocks that they personally own. Correct me if I am wrong. So that
I don't know if they're fronting the stocks that they personally own, and I don't want to speak like an authority on this because I am not. But from what I've been able to glean over the the past time working here at Devi, you're getting the experience of ownership, but the actual ownership under the hood is not taking place as quickly as they're leading you to believe, which is not a problem for you and I, because we're just trading stocks. But underneath, it's a big problem for these brokerage houses or exchanges. It's a big pain in the ass. I mean, there's really no other way to put it. And so if somebody comes along and can actually solve that problem and solves it in a way that allows them to continue to service all of their assets under management with full regulatory compliance, wow, you open up a big market, right? And so if the crypto market is a hot tub, we're talking about the ocean now. We're talking about something much, much bigger. But really where some of the hang up comes, at least in my job, having to communicate this, is that a lot of people aren't familiar with a lot of the issues that happen under the hood because they're obfuscated for the end user. And most of the people I'm talking to are end users. So settlement risk is not something that a lot of people understand, right?
I don't even understand that.
Or when it comes to self-custody, right? If you're in crypto and you've ever used a centralized exchange, you know how important self-custody is, because in crypto we have hacks, in crypto we have insolvencies, right? It's literally just somebody is holding coins on your behalf. So understanding the self-custody problem in crypto is very important. But if you take my father who trades on TD Ameritrade or Fidelity, you don't really hear of any stocks getting hacked out of Fidelity, right? That's not the way that it works. Nobody's hacking the hot wallet. But it is, in fact, a very, very big issue. And it's something that the person or the organization that solves that problem, which we have done, is going to be big time.
Yeah. Man, I'm excited for Devi. Yes. Devi is positioning itself as one of the fastest, most scalable, and affordable layer one in blockchain. What exactly does that mean for anyone who's not familiar with any of these things?
Oh, you're speaking my language now, buddy. Let's get after it. So if you go look at most of your chains on the market, your fastest chains are going to be anywhere from, and I'm talking fastest, right? 10,000 transactions per second up to 50, 60,000, maybe, in real world clocked transactions per second. And there are a lot of different scaling mechanisms out there. One of them is called vertical scaling, which is essentially to make one monolithic chain as fast as possible. It's kind of like take the highway and put as many lanes on it as you can. And then there's horizontal scaling, which is essentially make more highways that are all going to the same place, right? That's horizontal scaling. Okay. Devi is clocked at 8 million
Yeah.
cross-shard transactions per second. Okay. Which also, so if you take what we're used to, we're talking about 50,000 transactions per second, and you look at 8 million, you go, well, that doesn't even compute. Like, we don't even live in a world where we would need that many transactions per second. So it's almost a metric I don't necessarily like sharing with people, because they go, wait, that doesn't make any sense, right? But what's really unique about this, the first thing that's unique is our sharding mechanism. And I'll explain it to you like this. So we have a few blocking level patents globally, which are really important. One of them is privacy on chain. So the way that I kind of want to explain this is, you've got privacy coins like Monero and Zcash, which use zero knowledge proofs.
Yeah.
And they're essentially unbreakable privacy. Unless you're the sender, you can't break the privacy on who sent what where, right?
Yeah.
Which is not okay for governments. They don't play that. And so what our blocking level patent on privacy on chain is essentially privacy with auditability, meaning similar to the privacy that you would have at your bank, right?
Yeah.
If you use a debit card, if I walk down to Starbucks and I wanted to buy a coffee, and I said, okay, give me my coffee, I swipe my debit card, and then that barista could see every transaction that I've done as long as I've had that debit card, that would suck. Right.
Yeah.
But that's kind of how crypto is that if they have your wallet address, they can go look at all your entire transaction history. It's all public on the Block Explorer. So we have come to expect a certain level of financial privacy in our day-to-day life.
Yeah.
So we have the blocking level patent on that, right? Privacy with auditability, which is essential for financial institutions. The second thing is something called fraud, theft, and loss protection, which is really not something you see in any part of crypto, right? In crypto, it's kind of like, if you send your money to the wrong place, you're screwed. If you lose your private keys, you've lost your money completely. Essentially what fraud, theft, and loss protection is it's very similar to what you might find at a Fidelity or a TD Ameritrade, meaning you can set up beneficiaries if you pass away. You can set it up so that you can set your wallet up in such a way where if you hold the private key and no funds are supposed to leave that account, right? Let's say it's a storage account and somebody comes in and hacks money out of there. As long as you have the original private key, you can pull that money back within 30 days. Or whatever parameter you set. You have options to, if let's say you lose your private key, but you have it set up that these two trusted individuals can come back in and get you access to that wallet, right? These are things that we see in traditional finance. We're used to this, but it's not something we see in crypto. So these key components are also very pivotal to like what I talked to you about earlier about the financial stuff. So, okay, back to why are we the fastest, most scalable network, right?
Yeah.
So in addition to those, each individual shard can be custom made to the enterprise that wants to use it.
Yeah.
And what I mean by that is we did some work with a Fortune 50 insurance company. Now, if you've got a really successful company, let's say you're a multi-billion dollar, company, whatever. You've obviously got legacy systems that are governing how you run your company, right? You've got not just like your standard operating procedures, but you've also got legacy Web 2 systems that are like CRMs or stuff that's underpinning how you're doing business. If we were to walk into one of these and say, hey, you want to use blockchain? Cool. Blockchain can, do X, Y, and Z for you, and maybe it'll add $10 million to your bottom line projected over the year. Great. Oh, but it's not going to work with the current systems that you're currently using. So you and your 10,000 employees, we're going to have to get rid of that and retool you, right? Nobody's going to do that. They're going to get the hell out of here, right? So because of, there's a couple aspects of Devi that are really, really important. One, our network is coded in C++, okay? That is a programming language that anyone that's ever taken 1 year of programming knows. Whereas most of your other networks are coded up in Kairos or Solidity or in Move or Rust, which are they're used a lot. Sometimes they're used in AI and different things, but they're not your common Web 2 programming languages.
Yeah, they're not familiar. Yeah. I tried to learn coding, but I've never heard of those coding languages. So they're not familiar.
They're specific. Now, the other thing that's really, really important is every transaction on the DevX network is initiated through a simple REST API. So what that means is as long as your Web 2 application has API capabilities, and every single one does, you can plug it into our network and make it work. No need for retooling, no need for a new department, no need to train them in a new programming language. We can meet any regulatory requirement. And due to our scaling solution, we can scale almost infinitely, right? So because of those together are really like a secret sauce when it comes to enterprise.
Yeah. Especially because if they try to retool all their employees, it would probably cost more than the things that they'll save.
Right. It's a wash, right? So there's a lot of benefits to blockchain, but it can't, like the pain in the ass can't outweigh the benefits.
Yeah. And let's talk more about the transaction per second, because you said you have capabilities up to 8 million per second. And I think a lot of people say, wow, that's amazing. And there's some people like me who doesn't even understand what's the point. Who cares if you have 10,000, 5,000, 1,000? What would happen in our day-to-day life that would be affected if we have a low number of transactions? So to the point that why would we need something better?
Yeah, let's talk about that. So this is a really, really good question. So on the Bitcoin network, and I don't have these stats in front of me, I'd have to look them up. I think they can do somewhere around 12 transactions per second, right? If you kick over to Ethereum with what we call the EVM, but Ethereum virtual machine, I think they can do somewhere around, if you really max it out, like 200 to 300 transactions per second. Yeah. One of the most popular networks out there right now is Solana. And Solana can do roughly, I think in real practice, about 20 to 30,000 transactions per second. They claim 50, but a lot of those are messages going back and forth from nodes. So what ends up happening when you start maxing out a network are a couple of things. One, it becomes more expensive because the way that it happens is the transactions use an auction style. Now, that's not necessarily true on our network, but like on almost every other network, if the network is congested and you're willing to pay more, you can get your transaction confirmed quicker, right? Got it. Okay. So the gas price goes up. Yeah. What also happens is there are certain applications, like let's say high frequency trading, or just certain applications that you just can't do on a network like Ethereum because it's just too damn slow and it's too damn expensive. So the way that our transactions per second really shines. Now, we're not 8 million transactions per second. We're 8 million cross shard transactions per second. So each shard could, let's say each shard does 3,000 transactions per second, but only 10% of those need to go cross shard. Yeah. Right. So we're talking about cross shard transactions, 8 million. We might be doing hundreds of thousands or millions more transactions on the actual shards themselves. So why would something need to go cross shard? Let's talk about that for a second. If we've got, let's take Deb Exchange, right? And we've got a French shard and we've got a United States shard, and you're a French national, and there's certain assets that you're allowed to trade based on your nationality, based on the regulations you live under. Correct. So if you're trading, you're living on your shard, right? You don't have to go cross shard because you're just trading French stuff. If you want to send assets from a French wallet to somebody on a USA shard, now you have to go cross shard, right? Now you have to go out of your wallet and into somebody else's who's in a different jurisdiction. And so really even saying we do 8 million transactions per second is not accurate. We can scale fairly infinitely. Like we can do it bigger and better than almost anyone else can, which we don't live in a world right now where that's important, but we will. There will come a day when we will live in that sort of world. Yeah.
Especially if we are trying to adapt something new, especially to a blockchain, then we'll choose something that could probably scale to infinity so that we won't have any problems in the future.
Correct. Yep.
So basically, the transactions per second. So if we have like Bitcoin 8 per second, it would be an auction system where the first one to get through the highway is the one who pays the highest. So it's gonna be more expensive. And the way that Devi is more scalable and more affordable than than Bitcoin or Ethereum is that the fact that especially if we are trying to adapt something new, especially to a blockchain, then we'll choose something that could probably scale to infinity so that we won't have any problems in the future. That's a great way of putting it. Yeah. So basically, the transactions per second. So if we have like Bitcoin 8 per second,
Can I ever, man?
It should,
All right, so let's get
it
into
would
that. So
be
we're
an
gonna. This one
auction
is gonna
system
take a
where
few
the
minutes
first
for us
one
to
to
get into
get
this,
through
okay?
the
Because we've
highway
got to
is the
talk
one who
about carbon
pays the
credits.
highest.
And
So
are
it's
you
gonna be
familiar
more
with carbon
expensive.
credits? Like, do you
And
know
the
what they
way
are
that
and like why they
Devi
should
is more
exist?
scalable and more affordable than other and than Bitcoin or Ethereum is that the fact that they don't have those tollways because they just have a massive amount of free highways that anyone can go through at any time because that's the amount of it.
No, that's a pretty good. That's you probably know more about
It's
that than I
amazing.
knew when I started working at Debbie.
It's
I would tell
genuinely
you. Actually,
amazing.
I can
And
guarantee
I
you know
also
more about
saw
that.
that you have a green fund. Can you talk more about that? Yeah.
This is a good example. Okay, so I'm gonna call back on that in a second. Okay, so back in
Yeah, if you plant
2015, there
more
was something
trees,
called
then
the
you get
Paris
more
Agreement.
credits. Then you can
In the
resell
Paris
those
Agreement,
credits to the companies that have
almost every
maybe
country
a
in the world got
bad,
together, with the exception of six,
this
and they
much
decided that certain
carbon so that
greenhouse
they need to
gases
actually pay for
were
it, but
the
they can also
culprit
pay for
for
it by
climate
having
change,
these carbon credits.
namely
Correct me if I'm wrong.
carbon, but also methane and all sorts of fluorocarbons and different things that I can't even pronounce. And so what they did is the Paris
I had
Agreement,
a
in an
guest
effort to get
who
greenhouse
is
gases under control, is they
how did
put
you hedge
caps
fund manager who they
on
prioritizes
worldwide,
planting
which
trees so that they
then
can resell
also
those
went
carbon
to
credits
each
to these
individual
different
country.
companies.
They said, okay, this is your carbon cap. We need you to stay under. So what the countries did is they went back to their own countries, and through regulation, they said, okay, if you're a carbon emitter in our country, here's your cap, and we need you to stay under this cap in one of two ways. Okay, the first way is you lower your carbon footprint. Now, why that's important is if, let's say, I have 100 tons of carbon in a year that I can emit, and I only emit 80, what I can do is I can commodify the difference. I can take those other 20 tons, give it a price, and I can sell those on what are called the regulated carbon markets, which is known as the cap and trade market. I can sell those to other companies who don't have the ability to stay under their cap, thereby allowing our country or our world to stay under its cap. Okay, so that's the regulated carbon market, and we don't play in that, but it gives us a good baseline to where we're going. The voluntary carbon markets, which primarily deal in something called carbon offsets, which are what you were just talking about. Carbon offsets are things that have a quantifiably positive environmental impact, meaning planting trees. Okay, so that's one great example, or saving the forest from deforestation, or increasing the biodiversity of species in certain areas, right? These are all great things that we can quantify would have a positive environmental impact. A couple of things I want to mention. One is that only about 20% of the needed carbon offsets in the entire world are going to be able to come from environmental solutions like we just talked about. The other 80% have to come from technological solutions. And when I say technological solutions, I mean, so we have a company in the Devi ecosystem called TS Nano. TS Nano has a nanopolymer sealant. Then when they mix it with concrete, they can go seal up old oil and gas wells. Now, old oil and gas wells emit methane into the atmosphere, which is like 30 times more damaging than carbon. And so by doing this, what they can actually do is they can quantify the amount of methane they're preventing from escaping into the atmosphere, and you guessed it, they can create carbon offsets as a result, right? Okay. So back to the original question about the Evergreen Fund. So the owners of Devi, we have been in, I'll call it the ESG space, but it's really the carbon space for quite some time. In fact, we have a sister company that's publicly traded on the NASDAQ, which is a carbon credit creation company. You can't say that one 3 times fast. And so we've been in this industry for quite some time. So what the Evergreen Fund is specifically is in the carbon markets, there is a large, I'm going to call it a large issue, but really what it is, it's a large lack of transparency and provable provenance. Meaning, if I were to save a forest that was under imminent threat, right, from deforestation, and create carbon credits as a result of that, but I was just lying about the actual imminent threat of the forest just to get the carbon credits, right? That's a bummer. And what that means is we've got carbon credits on the market that aren't packing the environmental impact that the potential purchasers would require, right? So there's a tremendous amount of liquidity that wants to enter this market, but due to lack of transparency and provable provenance, it won't. It's currently like a $1 trillion a year market, the voluntary carbon markets, but it could be many, many multiples of that if it was guaranteed that the companies that wanted to purchase these assets were guaranteed to get the asset that they're purchasing that had the environmental backing. So where Devi and DevEx is uniquely suited is, again, sister company, publicly traded. We've been in this industry for quite some time, working in conjunction with not only the sister company, but our other ecosystem companies, is when these carbon credits are created, they will live on the DevEx chain. They will contain all of the data as to why they were created, when they were created, who created them, why were they created, were they ever sold before? And we can take them all the way through to their sale on DevExchange. Okay, so our exchange isn't just a crypto exchange, it's an everything exchange, securities, impact assets, everything. Okay. The Evergreen Fund specifically is a fund that's owned by the Forever Association, which is our not-for-profit organization. It's Swiss. And essentially the way that it works is, so you kind of have to know the breakdown of the Devi token, but the max supply of the Devi token is 300 million, of which roughly 150 million will be circulating. The other 150 million are held at the Forever Association. And the way that it works is, the way that the Evergreen Fund works is it's seeded through OTC sales of Devi. Now, don't let that scare you, because when we OTC Devi to, let's say, a major institution, they're required to stake and lock that Devi for a number of years. It has to be completely locked and off the market. That's really important. Now, for these institutions to have access to any of the impact assets that live on our chain, that's what they have to do first. They have to stake and lock their Devi, okay? And to get that Devi, they're going to need to OTC it from us, which is going to put 100% of that into the Evergreen Fund. What the Evergreen Fund is then going to go out and do is it's going to find ESG-related investments such as TS Nano that I just mentioned to you. We're going to purchase equity in those companies, which we've already been doing. Those companies, not only does the equity mature, but also they create impact assets as a result. Those impact assets will then live on our chain. 100% of those profits will go back to the Evergreen Fund, which will then reinvest it in more companies. So what we're doing is we're kicking off a flywheel of impact assets living on our chain. Now, as more and more impact assets live on our chain, the requirement for anyone to touch them, well, but for anyone to even touch them, they must stake and lock up Devi. Now, here's the thing. These are ultra premium impact assets, meaning they're verifiably true and correct. You're never going to get one that won't actually be what it says it is, right? Which for any business, and I'm sure you would agree with this, no matter how much you want to do good for the environment, if you're a business owner that's beholden to your shareholders, the environment's great, but if it messes with your bottom line, nobody gives a shit, right? And so if they're taking money out of their general revenue to allocate towards these carbon credits, why would they do that? One, to stay under regulation, but two, because their customers like it. They like to see that they're doing something environmentally positive. If that money's coming out, it damn sure better have the environmental impact backing it, because they're taking the risk on buying them. And so this is a really, really important. So you can see why it took us a little while to get to that end conclusion. And that's one area of things that we do, but we have a lot of experience in this particular area.
Yeah, doesn't matter. Yeah. Yeah.
Yeah, so close. I'll correct you slightly, okay? So almost 25% of the total assets under management in the entire world are invested in ESG-related assets. ESG stands for environmental, social, and governance, right? It's not directly carbon credits, but the carbon markets play a really important role in ESG investing. And many ESG investors, like the one that you just mentioned earlier, right, who wants to have these impact assets for resale, they want to have access to these impact assets. So for them to get access to the impact assets that we have, what they're doing is they're purchasing that other 150 million that are locked at the Forever Association. Those are the ones that are going to be OTC sold to institutions, right? We're not talking about everyday people. We're talking about hedge funds, institutions, governments, those folks. And those guys are then going to take that they just purchased and lock it, right? Now, what they're doing is they're paying for the right to access, while at the same time, the right to access that they're paying for will unlock at some point down the road. So there will be a recoupability factor. But what we're doing is we're taking 100% of those funds that we get from an OTC sale, and then it goes to the Evergreen Fund, which get invested into companies, equity, impact assets, and it just goes around and around. So will that drive demand for the Devi token? In a sense, it will. But what's really important is every single person that touches our network, right? From multiple sovereign states that we're working with, any company, right? Anyone that is using a shard for their company, they must pay in the Devi token. They must hold and pay in Devi. So Devi is the key to all of this. And in fact, even on Dev Exchange, every single trade routes through the Devi token. Every single one.
Yeah. You know, I think one use of this.
That's one way to look at it. I never really thought of it in that way. One way that I would like to look at it from a government perspective is, okay, you're in the Philippines, right?
So they have access to these
if you think of a country like a company, a country has certain assets the same way that a company does. So a company's assets might be the product that it makes, the goods on hand, the net receivables, right? These are assets of a company, property that you own. When it comes to a country, your assets are your people, your gross domestic product, the forestry and the interior, the biodiversity of your wildlife, etc. And when these things are under threat, like let's say, okay, climate change is causing rising salinity in the ocean that's around your country. And as a result of that, certain fish species are dying off. Well, you're naturally going to do something to mitigate that risk as a country. Same way that as a company, you would mitigate risk of losing, value, let's say. Many countries are doing this naturally and not realizing that they can monetize this behavior. And so as a company in this industry, Devi specifically, right? When we go into countries and they say, hey, you're doing these things naturally, let us show you how to turn that into a revenue stream, right? This is a really fairly simple conversation to have. And even more so, there are many countries that have been monetizing this behavior already, like many countries in the Caribbean and things of that nature. But because it took a few $1 million to set up the sensors and the different ways of reading the environmental impact, what's been happening is you've got these middlemen that came in and they said, hey, you want to set up this revenue stream? Cool. It's going to cost a few $1 million. Do you have that? And they go, no. Okay, we'll put the few $1 million out there, but we're taking 80% of the value that you produce. And they go, well, okay, it's better than nothing. Right. But what's happening is they're really ripping off the indigenous people because it's their land. It's their farmland. It's their whatever, right, that is actually generating these. And so through the Devi solution, we can cut out those middlemen completely and return that money to the actual people that are doing the work. Yes. And it's not so much that they're the seller, but they're creating these impact assets, then would live on chain. And then anyone that wants to come buy them, right? Think of Dev Exchange like a carbon market. It could be, it's going to be, or a securities market or anything you can exchange of value. But a verifiably transparent marketplace. So that's really important. Yeah, it's really good. It's important.
So basically allows anyone to be the seller to this company.
And liquidity that wants to enter would enter because they would have the trust involved.
So basically it could potentially make an open marketplace.
Yeah, that's a good question, man. So
that's good.
For me, being the community guy, that's kind of my gig, right?
Especially because if you have an open marketplace, then why wouldn't you be motivated to do more things like this?
Crucial. Now, if we were a blockchain company that didn't have a token that specifically worked with enterprise,
it's amazing. Solving,
you could probably do it without a community. But so many aspects of it would be missed in that regard.
I think one of the questions that I have
a lot of our initial funding came through the pre-sale of the Devi token, and so that was needed. Early on.
How important is a community within
and as a result of that, you get a community, which is amazing. And as that community starts to grow, I love talking. I don't know if you got me on here for 50 minutes. You won't shut me up. I'll keep going, right? But one of the greatest joys I've ever had in this space is getting a DM from somebody going, hey, I didn't know how to do this. You taught me how to do this. And as a result, here's how my life has gotten better as a result. And it's like, wow, that was worth getting out of bed this morning, to hear that. So yeah, there's a lot of positive aspects to the community that I love. That's such a good question, man. And that's kind of been the question that I wrestle with almost every day here, right? And so it's if you try and eat Devi in one bite, you're going to choke on it. It's too big, right? We've got to distill it down, So that's why I do interviews like this, or I'll go do AMAs. If you give me,
I think
I
one
used
of
to say
your
30 minutes,
main,
but really an
focus
hour. If
in
you
what
give me
you're
an
doing
hour
in
with
Devi
you,
is to
I'll get you up
educate
to speed
the
on what we're
people
doing,
who's
like from
investing in
start to
Devi,
finish.
people who
Or
are
if you just kind of
interested in
want
it,
a
to
basic
educate what you're
overview,
doing.
right? I've got
How
videos that are
can you
really,
educate
they'll get
people
you
on
there,
something
right? If you
so
have an interest in
complicated
how
to a
we
way
can
that
work
they
with
could understand
artificial
it?
intelligence, or how the exchange works, or our work in the carbon markets, right? I have videos that explain all of them. Or if you've
Yeah.
got 7 minutes and you need it really, really fast, the intro to Devi video is good.
Yeah.
Well, just think of it like we're like any other chain, except we're faster and we're much easier to use, and
Yeah.
we're not going after the same market that every other chain is. We're going after everybody else. So most of these chains, and there's hundreds of them, they're going after the crypto crowd, right? They sometimes, Salt Bay, or Salt Bay. You ever see that guy?
No, we've been talking for 50
they
minutes
sometimes
now,
pepper
and most
in
of it
like
is about
some
Devi, and I still can't get a
enterprise
hold
use
of
cases
what it
or
is.
like bigger
I know the main
partnerships and things
overview
of that
it,
nature, but
it's hard to
primarily
comprehend
who
what
they're
it's
going
doing.
after are
Genuinely.
the people that are already in crypto. And so what that means is if the crypto crowd is expanding at 10% per year, let's say, but the number of new chains are coming out at 20% per year, they're cannibalizing one another. They're all going after the same crowd, and that crowd is shrinking. The reason they're going after that crowd is because of the open source nature, right? The decentralization and all of that, which are all wonderful tenets of crypto. But because of that, it makes them unusable to a large degree for anyone outside of crypto. Because if you take my 70-year-old father and you go, hey, learn a new, write down a mnemonic phrase. Don't take a picture of it. Make sure when you've got this alphanumeric string, we're calling that an address, but really just like make sure you've got them all correct. Because if you send to the wrong place, you're never going to get it back. Stuff like that. People aren't going to play in that. Like I've come to expect that because I've been in it a long time, but there was a great learning curve that I had to go through and that everyone's had to go through. So really where we're trying to go is things that you have in your home that can operate more efficiently with blockchain that one day just work better for you that are using blockchain, but you don't have a clue. That's the point.
Yeah.
Well, kind of, yeah. So like take Ethereum, for example, right? Ethereum came out in 2015. Smart contracts came out in 2016. We didn't even get DeFi until like 2020, right? So what happened was when DeFi 2020 hit, it got really expensive, like $200 to do one transaction on Ethereum. And
the other
went,
blockchains are going
this is not
to
going to
the
work.
people
And so
who are
then we had
already
Binance Smart
semi-educated
Chain
on what
came
the
out,
crypto
which was
market is.
from Binance. And it
Because
was
they're
much faster. It was much cheaper. And they were like, cool. So people started migrating over to BSC.
But Devi is
And then you had other chains like Avalanche and Polygon and Phantom and all these other chains that were just a little bit faster and a little bit cheaper. So now you've got people on Ethereum and BSC and Avalanche and Poly, but it's all the same people, just now being fractured, right? And if there's a million people in Web3, I'm sure the number's higher than that, but if there's a million people in Web3, there's billions of people not in Web3. Oh, did I drop? Are you okay? All right, cool. Oh, sorry about that, buddy. But there's billions of people not in Web3, right? And so instead of us trying to go cannibalize a market that's already saturated, we have the technology that enables us to play in the places that crypto has traditionally never been able to play.
Yeah.
Yeah.
I think we got. We're fine now. Yeah, I think we got disconnected.
Now imagine if because this is on the horizon. Imagine if stock markets were powered
I'm
by
just imagining
blockchain.
right now,
There's a
remembering
lot of
the
good that can come of
FTX
that.
phase
A lot
where
of
they're
big
just
problems that the
plastering
world
their
has
logo
just
to
come to
everything that
accept
they
as
can.
being true
Stadiums,
can be solved by
jets,
that. But it has
everything.
to have a
Still going for
solution
the same
that
crowd,
enables the
basically
privacy
saying,
on
you
chain,
know, we're the
enables the
most
fraud, theft, and
famous
loss
one, but
protection, is
the world
fast enough,
genuinely
has
doesn't
full
need the
regulatory
most famous
adherence, right? These are
exchange.
things that
It needs
chains
the most
generally don't
functional
have
one, the most
altogether.
beneficial one for the whole
We
world,
do.
and that's what's gonna get adopted in the long run, because it's not gonna be just a trend, just like what FTX is. It's gonna be something
Right.
that is
Not
a
so on our
common use
network.
for the whole world. Yeah, 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 yes,
Boomers aren't going to do that, man. They're not. And my dad's not going to do that. Yeah,
yeah,
exactly.
yeah. Yeah. No, I think that's one of the bad things about crypto is that, you know, if it's a loss, it's loss. Yeah. I think that's good, genuinely, because
Mm-hmm.
it's gonna
Yeah,
be open to the
absolutely.
more conservative crowd, which is mostly everyone, because not everyone is willing to risk their money for something that they're not even sure what is. Yeah, I'm not, I'm not gonna do it.
I do. I have actually a hard stop in 3 minutes,
No,
John.
because it's not that you just pick up money, you work for it. You need to make sure that, yeah, even if there's something that is slower, maybe this part is slower, or maybe
Yeah,
that part
so
is not as
if
great.
you have
As
interest
long
in
as my money is
learning about
safer there
Devi,
than this
go
one,
to
I'll probably
devi.io,
choose that one. But if you can give me the
devv.io. Check
convenience
it
of
out. If
this
you're not
one
into
and
crypto,
that
but
one at the
you
same
are,
time, I'll
we're
probably
in a little
choose
bit of
you.
a bull market now, so you're going, hey, all my buddies are into it, and they're all making a bunch of money.
Very interesting topic.
If
You
you
know,
have a genuine
we've been
interest,
talking for
don't
a
buy
while
the
now, and I
top
think interesting
first, because we
topics
do
that
go through
I've
cycles generally in
spoken
this
of for a
industry.
while.
So,
But
but
I
yeah,
don't know if you have time
I hope
constraints
you check us out.
in your end. Do you have? Oh yeah.
Oh, bumping my head
Since
over
we're
the
nearing the
course
end
of
of the
years.
podcast, do
No,
you
I
have
mean
any
the best
advice
way
to
was
anyone
you
who
learn
might be
about.
interested in learning more
I
about
would learn
Devi
about a
or just the
project. I'd go
blockchain
join their
community
Telegram,
altogether?
go join their Discord, and then over a couple of year period from 2020 to 2020.
That's all for today's episode of the New World Podcast. We have explored some fascinating topics with our amazing guests, shedding light on the upcoming new world. If you enjoyed today's episode and today's discussion and want to stay updated the future episodes, don't forget to hit that subscribe button to the podcast. And if you found value on what we have discussed, please consider leaving us a review on your favorite podcast platform. Remember, if you have any questions or topics you'd like us to cover, or if you are interested in being a guest in the future, please feel free to reach out to me via LinkedIn or email me at john.paul@aicinix.com and add New World Podcast, all capital, in the subject line so I can see it. I always love hearing from our listeners. And don't forget to check out our amazing guests. You can find more information about them via the contact details we provided earlier. Again, thank you for tuning in on the New World Podcast. I know your time is very important, and I try to always make the next episode better than the last. Until next time, keep learning, keep growing, keep innovating. This is John Paul Flores signing off from the New World Podcast.